Okay, so for this tutorial, basically what I'm doing is I looked at the questions that I put on your midterm, and you'll notice that actually, I hope you're thanking me for this, but you'll notice that there really aren't a lot of transactional questions on the midterm. It's mostly definitional, true, false, that type of thing. And that kind of goes with the idea that I have for you, that is, most of you I know are not going to be accounting majors. So if you're not an accounting major, what I want you to get out of the class is a familiarity with the language of business, which is what accounting is sometimes referred to as. So you definitely need to know all the types of vocabulary and be comfortable with what they mean, that type of thing. I want you to have some experience with the transactions just so you're not totally clueless if you ever see those as a manager of a business and you know kind of what's going on. But I don't want it to be so hard that I'm trying to weed you out as a possible future accountant. I kind of feel like if you're going into accounting, then after you get through the principles level classes, you move on into some stuff that is a little bit more complicated. So anyway, with that in mind, I didn't put a lot of transactional stuff on the midterm. There will be some more. We will get into more transactional stuff a little bit in the quizzes, and then the final for this class, and then moving into next part of the summer if you're with me for that class as well. But I wanted you to just get an idea of if you come across something in your homework or as you're reading or something that you don't understand, you can always send me an email and I can do a little walkthrough like I'm going to do for these questions. And you'll see that I've actually copied and pasted these exactly from your midterm. I'm not going to work them like that. I'm going to change some of the numbers, but you'll see it's the same principle. So similar would be true if you had a quiz question or a homework question that you didn't understand. I would just probably copy it, put it on the Excel spreadsheet like I have here, and then I'll change some of the numbers. So for this first one, Glorious Gloria, a florist, had the following transactions in August. She earned $2,000 revenue. So we're going to change that to $3,000 revenue, revenue on account, and collected $5,000 from a customer for goods sold last month. Incurred, we have $600 of repair expense. I'll change that to $800. And paid $200 to a supplier. I'll change that to $300. There we go, different numbers. Okay, so taking it as a whole again, Glorious Gloria, a florist, had the following transactions in August. Earned $3,000 as revenue on account. Collected $5,000 from a customer for goods sold last month. Incurred $800 of repair expense and paid cash. Paid $300 to a supplier that it owed from the previous month. What is the net income in August? Okay, so if you recall, and if you don't, you should look this up or be familiar with it. Net income is just going to be revenues minus expenses. Now the only trick to this, because normally you'd say, okay, revenues minus expenses, I'll just add up all the revenues, subtract out all of my expenses, and that should give me the answer that I'm looking for. But you have to be careful here because the real question here is, do I understand how to record revenue and expenses under an accrual-based accounting system? And that is what GAAP accounting or generally accepted accounting principles requires. So it's not as simple as did I receive cash or did cash go out of my pocket. That's what a cash basis person would say. But for an accrual-based system, we're going to record revenues as they're earned, whether we collect them or not. They go in towards our net income for whenever we earn them. And then we don't really worry about when the cash comes in for them, not for net income purposes anyway. When we incur expenses, we're generally going to record them when they are incurred, not necessarily when they're paid. And on that same note, if we have already incurred expenses in a previous period, it doesn't matter that we pay for them this period because we recorded them and they went towards our net income or net loss calculations in whatever month we incurred them. So as I look at these numbers, I see earned $3,000 on revenues on account for the month. That number is relevant to this month because I will record it this month as revenue. Collected $5,000 from a customer for goods sold last month. Irrelevant because I've already recorded this $5,000 in my net income for the previous month, which in this case would be July. So far I have $3,000 revenue. I'm going to just write that over here. $3,000 revenue will be in that column. So that looks like all of my revenues. Now I'm going to subtract out the relevant expenses for this month. So it says here I incurred $800 of repair expense this month and paid cash. Doesn't really matter that I paid cash, but since I incurred it this month, I'm going to put in parentheses $800. That just means, whoops, in parentheses in the accounting world just means a negative number, so you see that recorded there. And then I paid $300 to a supplier that I owed from the previous month. Well, if I owed them that money from the previous month, I don't need to record that as an expense this month. The fact that I paid it this month, again, is irrelevant. So really, I only have two relevant revenues, or one relevant revenue, one relevant expense. And in this column over here, and obviously you can probably do this in your head, but if I just want to add these together, I will take revenues, and I will add it to my expenses because I have them recorded as a negative number here, or if I had written it as a positive number, I would subtract expenses, and that leaves me with $2,200 of net income for the month of August. That would be my answer in this situation. Okay, so again, simple addition, subtraction, that's all the math that was needed here, and all you really needed to know was which ones of these numbers are relevant in the recording process for this month. And we're going to assume, since it doesn't say cash basis here, that this is an accrual basis accounting system, which requires me to record revenues as they're earned, not necessarily when they're collected, and expenses generally when they're incurred. Okay, so moving on to the second question. Misty Company had 20,000 units. We'll go ahead and change that. Again, not a huge deal here. It's more the concept. But since this is the number on your midterm, I'll change it to 30,000. And I'll change the cost per unit here to $10 per unit. And the replacement cost to $9.25 per unit. Okay, now I can look at this question. It won't be exactly the same again, just the same concepts. Misty Company had 30,000 units of ending inventory. They were recorded at their cost of $10 per unit using the first in, first out method. So if I had been using the first in, first out method, which it's saying I have here, recording units that I sold as if I'm selling the earliest unit that was in my inventory, they're telling me that the 30,000 units I have left over using that system are valued at $10 per unit under my current system. However, to replace each of these units, it only costs $9.25. Okay, so using the lower of cost or market rule, which just says that if the current replacement cost of my inventory happens to be less than what I have it recorded on my books as costing the company, I should use this lower value. And that basically goes just to the conservatism principle in accounting, because if you look at where inventory is recorded, it is recorded as an asset because it is something that will give you value in the future. Now, if I record this asset at a dollar value higher than what it's actually worth right now, or what it would cost the company to replace right now, then what I'm actually doing is I'm overvaluing one of my assets. And that will throw off, in this case, my balance sheet, because my balance sheet shows my assets, my liabilities, and my owner's equity. So by overinflating my assets, I will overinflate the calculations on the balance sheet for my asset column and also the balancing side on the owner's equity column. Okay, so if this is a small company, maybe that's not a huge deal, but what if the number of units is 3 million units, and all of a sudden, I have 75 cents, which is close to $1, close enough for this purpose, and I have 30 million units. All of a sudden, that's $30 million of overvalue that I'm showing in my balance sheet, and that's a big deal. Okay, so that's why this could be a very big deal. In this case, not a huge deal, but the fact that the replacement cost right now is less than what my book cost is showing per unit using the method that I used, which was FIFO, that means that I should basically change it so that the asset of inventory at the end of this period shows the lower of cost or market, which in this case is market. So I would take my 30,000 units, I would multiply that times my lower value here, which in this case is market, and this $277,500 would be the amount that I showed in my inventory asset account at the end of this period. Now, as you can see, if I had recorded it at cost, then that would have been an even $300,000 here, and so I basically would have been overvaluing by $22,500. Again, maybe that's not material in this situation, but as you get to more and more units, it does become a bigger deal, and that's where conservatism wins out. So that's why it would be important. So again, these are the types of walkthroughs and explanations that I can give you if you are struggling on any of the questions. Feel free also, I just had a student come in and talk to me today and in person and get some explanation. More than willing to do that as well. So just let me know, and I hope this helps, and keep in touch if you have any questions or any help is needed.